Thank you for joining us. It's time for analysis of the equities market. Well, tradings in July on the Nigerian Exchange Limited concluded a positive note, with the NGX All-Share Index gaining about 5.5% and reaching a closing value of 64,337.52 index point. Despite concerns such as rising inflation, interest rate hikes, and apprehensions surrounding the fallout of the 2023 general elections, investor confidence remains strong, leading to increased buying activity. The all-share index opened the trading month at 60,964.24 index point at the beginning of trading in July and closed at 64,337.52 basis points at the end of the month, gaining about 369.25 basis points. Further analysis review of that activities on the exchange, which opened the trading year at 33.19 trillion in market capitalization at the beginning of trading, close at the end of the month of July, 35.01 trillion naira. Well, there you have it. Capital markets gain about 1.81 trillion in the month of July. Christian Isaac Anyalisi, stockbroker and investment analyst, joins me virtually now. Thank you for joining us, Mr. Anyalisi. We appreciate you for coming on the program this morning. So, talk to us about the market in the month of July. I know you've been on the show severally, and you talked about the fact that there's a positive, energy or body language coming from Mr. President there. So talk to us about what are the other factors that contributed to the rise or the rally that was recorded in the month of July.
Yeah, to answer your question very straight, the rally that we experienced in the month of July is attributable to the policy change of Bola Ahmed Tinubu's government. The removal of fuel subsidy, the unification of the exchange rate, were some of those policy thrusts that were very market friendly, and we have seen that reverberate, in the capital market positively. The rally was as a result of economic reforms.
It's all right. Okay, so yes, we've seen that, yes, there are some policy changes and all that. And if you look at yesterday, the president also came up again in a televised address to address Nigerians. Talk to us how this is likely to affect the market in the coming days.
Yes, you see, pronouncements and communication, executive communication from the president or even within the companies are very, very crucial, in shaping the direction of investor confidence in the market. The pronunciation of the pronouncements of the government of Tinubu yesterday, has put pace to some of the policy direction. It shows that he wasn't the president or the direction of economic growth. If you remember that a few days before, the Economic Intelligence Unit, an American, a foreign analytical firm, was suggesting that the Nigerian government will not be able to sustain a unification rate. You have seen Tinubu coming out to tell us that he will continue with that policy trust. So it is always good, it's in tandem that when there are situations like this, that the president or whoever is at the helm of affairs in a particular within a particular entity comes out to reassure the investment public of the trust of directives. So that is what the president has done, and we will see that impact positively in the market, because one thing is to have most of these policies in place, another thing is to also stick to it. So the president has demonstrated the nerve, to continue in this policy direction, and you will see it impact positively in the market.
Okay, let's look at the specifically in the month of August. We do not know whether the market is going to build on the July record or history that has been. So talk to us about what the market, or what is likely to shape the market for the month of August. We're seeing that, of course, according to some analysts, they expect investor sentiment to be influenced by development in the macroeconomic landscape and the movement of yields and the fixed income market. So what are your thoughts here? Can you share your thought with us here?
With respect to movement in yield, okay, on debt instruments, we expect that if the debt market is doing very, very well, okay, or is highly attractive, that it will adversely affect the equity segment of the market. That is other factors remaining constant. That's other factors remaining constant. But of course, in Nigeria, I think the equity market has also demonstrated resilience against yield increases in the debt market. But that is what you expect to see, given the fact that the monetary policy rate has been increased from 18.5% to 18.75% in order to address rising inflation, which stood at 22.79% as at June, and expected to be printed at something above 23% or 23.05% as at the end of July. But then the month of August is also a promising month for equity investment, because we are going to be seeing a lot of corporate results, being turned into the market, and to the extent that some of these results are strong, you expect that investors' appetite for those stocks that have shown very promising results, very strong financials, will continue to attract investment. So that is what you expect to see. You also see a situation where the new ministers will soon resume, and there is also going to be some other positive policy, revelations that the government will come up with, and to that extent, you still see an equities market that will be vibrant for the month of August. Don't all forget that okay, there is this popular saying, buy in January and exit in June. If we're looking at that, that is for the foreign investors, who want to go on holidays for is that summer now and all of that. If we're looking at that, we might be thinking of seeing a depressed market. But that is happening now at a point when there are some policy initiatives that are favorable to the equities market. Okay, and don't forget that the half-year results will be trickling in within this week and next week, and that is supposed to also positively influence the market direction. Don't also forget that towards the end of the year, we expect a rally. Right. Okay, and portfolio managers and investors who understand the climate very well will want to take positions ahead of the rally that's coming towards the end of the year. Okay. So we don't expect to see a diminution, a serious diminution or diminution in the value of the market.
Okay, let's
for the month of August.
Okay,